Good morning, everyone. Thank you for tuning in to our Q3 2025 Market Insights. Today, we are very pleased to have you back with us, and we look forward to share some of our latest updates and latest information. And I will welcome your question after this webinar. So without any further ado, I'd like to start our presentation today. So to begin with, just a quick disclaimer. We do not know everything. We try our best to keep learning and updating and try to screen our source of information as much as possible. That's what we believe in the quality of data. However, if you have you spot anything wrong or you want a question on any certain data, feel free to reach out to us. Today's agenda will consist of a 6-part presentation where myself, Kinkesa Kim, the Managing Director for CBRE Cambodia, will present to you the overview of market in general, including macroeconomic updates, some updates on tourism, trades, and industrial developments, while Mr. Kim Siet, and then followed by an updates of office market and retail market. And then Mr. Kim Siet-ji, who is our manager of research and consulting services, will be presenting on residential, hotel, and industrial market. So to begin with our overview, we like to start our overview presentation with key economics indicator. This quarter, we have selected quite a number of indicators, including financial market and trade activities. So first of all, we have the updates on exchange rate, as you can see in the first graph on the top left-hand side. From throughout pretty much the 2020s part of Cambodia, we've seen that exchange rate between Khmer Rial and US dollar has been quite stable in between 4,100 Rial per dollar to 4,150 Rial. So the rate has been always fluctuated in between this range, in between 2020 onward. However, since 2024 and 25, we're starting to see more appreciation from the Khmer Rial. And this is, as we understand, can be understood from the weakening of USD, and the trend and rate of this appreciation of Khmer Rial actually also mirroring our neighbor countries like Vietnam Dong and Thai Baht as well. Onto the second graph on core inflation, we have seen that pretty much the beginning of 2025, especially in the first quarter, the core inflation rate had peaked. However, it started to adjust from Q2 onward, and we believe that it continued to be so during the third quarter and last quarter of 2025 as well. Onto the third graph, representing the residential price index as recorded by the National Bank of Cambodia. Now, I have to remind you again, this data capture all the transactions that went through bank financing. So meaning that all transactions that have been financed by the bank, so it doesn't include cash transaction and any other types of financing, including developer financing or installment and so on. So from this data, MBC presented that there has been an increase in overall OPPI, contributing by mainly, I think, Phnom Penh and also other provinces' contribution as well. However, we will be mindful that this increase is still relatively small, and it may be sensitive by certain methodology change in the research. Later in the second part of our presentation, Kim Si will present further on the data of residential price trend, as we also collected our own in-house data as well. Onto the fourth graph on the term deposit rate and linking with term loan rate as well. These two graphs combined together is very interesting. If you notice, the term deposit rate has been adjusted so far in the last 2 years or so, and we all know that this has been the reflect of global interest rate changes and the liquidity that present inside the bank, especially the local bank inside Cambodia. However, when you look at the term loan rate, you can see that the term loan rate is still relatively high. So if we compare to the term deposit rate that is averaging around 6 to 7% in most cases throughout the commercial bank, the term loan rate is still averaging around $11 to $12 for new amount. So this meaning that the discrepancy between the fund available or cash available in the bank, whereas comparing to the confidence of the bank in loaning to clients in the current market is quite large. Onto the last graph in our macroeconomic dashboard is the trade activity. We have seen that from throughout after COVID in 2021 onward, there has been a recovery in both export and import value compared to previous year, which was affected pretty much by COVID, and the recovery continued to be so up until 2024. However, in 2025, we are starting to see the reverse trend of the reduction or reduce in export and import speed. As we can see, the import and export value decreased, adjusted down to just minus 8% in dropped by around 8% in 2025, and the trade deficit still maintained at around minus 6%. However, this gap seeming to be closing. We have another dashboard that we love to present is a quick overview of the real estate sector within Cambodia and especially Phnom Penh. From this dashboard, we can see that both of the commercial aspect, including office and retail market, has presented a recovery in occupancy rate. Within that, we have seen that occupancy rate in office is standing at 64.9% at the moment, and occupancy rate for retail is standing at 59.2%. We will discuss into further detail of these two sectors in a moment. Onto the hospitality market, the hotel market is seeing a new supply of only 90 key, and the average room rate or nightly rate for five-star hotel is now averaging at $405 per room per night. In the residential market, consists of condominium, landed property, and service apartment. We see the continuation in new launches, although the speed of these launches has been slowing down. What is also more interesting to see is that we have seen more activity concentrating in the affordable segment right now, and the location that this supply that concentrate is locating in the south of Phnom Penh. I would not go into further detail, but Kim Sia will cover this very comprehensively in the second part of our presentation. So we have a quick look at what happened in Q3 2025 as in key headlines. We have seen, of course, the biggest headline for Cambodia throughout, since April was number one, the reciprocal tariff from US, and number two is the tension at Cambodia and Thai border. So these two development has continued to evolve. As we can see, there have been a movement in terms of tariff. The good news is currently Cambodia's tariff rate is at 29%. As compared to 30% for Vietnam and Thailand and some regional peers. However, there are still ongoing uncertainty around the China and US relation, and Cambodia as strongest trading and investment partner of both countries will continue to face headwinds. We also see that the tension along the Cambodian and Thai border has affected consumer confidence, has resulted also in a downward trend, especially in tourist arrival on land arrival. We'll discuss further. And on the international market aspect, we continue to see inflation is still remain a concern. And national bank across the world is reviewing their monetary policy to cope with inflations and to cope with the slowdown in investment in general. So we continue to observe the remaining 2.5 months of 2025, how this trend will fall out. Okay, let's move on to the next slide on the further discussion on GDP growth. As we are presenting here, you can see we are projecting the growth for Cambodia in 2025 at around 4.8% and forecasted to be 4.5% in 2026. Vietnam remains the leading in terms of growth in Southeast Asia region, which is expecting to grow at 6.8% in 2025 and 6.5% in 2026. It's also worth noting that the World Bank has adjusted their forecast in general to be lower. So on the right-hand side, we are presenting the comparison of World Bank's forecast. The first one was done in Q1 2025, and the second one was done in Q3 very recently. And as you can see, most of the Southeast Asian territory, especially in the Indochina region, has experienced downward adjustment, including even Vietnam, who is leading on the in the graph. What we understand is that in the region, probably only Singapore that have maintained or experiencing a positive adjustment throughout this study. Further on the impact of the tension between Cambodian and Thai border territory, we have seen a number of labor return due to either cultural tension or concern regarding safety or practically the boycotting of certain activity between the two countries. And as we're presenting here, the data on the total remittance inflow into Cambodia from across the world has been on a trajectory, uptrend trajectory up until 2024. Even with slower growth at 6%, the contribution is still very positive. So we are not entirely sure on how much remittance from Thailand contribute to the total amount of remittance presenting here. However, what we understand in terms of the number of migrant worker from Cambodia into Thailand represent 1.3 million laborers, as according to the UN Department of Economic and Social Affairs. And according to Cambodian Ministry of Labor and Vocational Training, there has been around 940,000 labor returns from Thailand just during the past several months. So this represents quite a significant adjustment in remittance, as we can expect. And also, according to the verbal reporting from Minister of Labor, there has been a placement of around 200 to 300,000 of these workers into Cambodia manufacturing or agricultural establishment. So this is an encouraging sign, and what expert has been forecasting, there has been two schools of thought. One school of thought respecting that the consumption inside Cambodia domestically will be affected due to the reduction in remittance. However, there's another school of thought that expect that the consumption could potentially be offset regardless of, let's say, only 1/3 of the returnee labor have been placed, because the now the income earned and all the expenses will be happening domestically, which somehow may offset for certain part of the reduction in remittance. So again, this is a trend that we'll continue to observe closely until the year end, because in the retail part, you will see that actually the majority of the current entrance and expansion in retail market is predominantly in F&B market, and of course the consumption power speak very strongly of the movement in these brands. We've got another slide on the health of the financial market. As we're presenting here, the graph is a bit complicated, but if you look at carefully, the teal painted background is representing the broad money, which is representing M2 as in the technical term. However, for more simplified term, this represents the available money supply or cash flow in the Cambodia economic. And as you can see, throughout 24 and 25, the broad money has increased from between $50 billion to around $60 billion US dollar. So it's presenting still a strong liquidity environment. However, if you look further into the types of the money inside the economy, representing by the bar chart, the other deposit, which consists of, let's say, a fixed deposit and other foreign exchange deposit, still represent the highest amount and continue to grow. In this sense, it represents that consumer has stronger saving behavior as opposed to spending behavior, and also reflecting on the confidence of the overall economics movement as well. Okay, next slide, please. Onto the approved investment value into construction, we have noticed that construction activity has rebound. If you look at the first graph, the amount or the value of approved investment into construction by the end of August has already surpassed that of full year 2024. It's meaning that the value of investment has returned. And if we look at further into the sizes or the square meter of this approved investment by types, on the right-hand graph, you can see that the industrial and residential are leading the new investment into construction. And again, like we mentioned earlier, we continue to see residential development launches, as well as private project continue to expand. And more encouragingly, we're happy to see the industrial construction also expanding, which will also be discussed later as well in our presentation. Very quickly on another aspects of industrial development, our team tracked down the method of import and export value by the transportation type. So as you can see, what we're presenting on the left-hand side, sorry, the sea transport is dominating both the value of domestic import and export. So this is again representing the demand or the popularity of seaport. As we can understand that sea transport is usually cost cheaper than land transport and other means of transport. On the right-hand side, we also take this opportunity to review the port capacity between Sihanoukville Port, autonomous port in Cambodia, with the regional port such as Luang Prabang in Thailand, Kai Map in Vietnam, Port Klang in Malaysia, and the Port of Singapore. So as you can see, in terms of the max depth, our Sihanoukville autonomous port capacity remain at around only 8.5 meter to 10.5 meter only. So comparing to the capacity of most regional ports at between 14 to 16 meter depth, this further justify the expansion and the need for expansion of the only deep sea port that we are currently utilizing in Cambodia. So hence, we can see that the government has put investment into these deep sea port in partnership with the private sector into further expansion and deepening of this seaport. Last but not least, for the overview, we love to take a quick look and quick update of the infrastructure development around Phnom Penh and in some of the key province in Cambodia. Of course, the one of the biggest news in Q3 is the opening of the new Techo International Airport, KIT. In terms of operational launches, although this hasn't been officially inaugurated, the amount of tourists has arrival of passenger has already completely moved from the old airport, and we're expecting an official inauguration sometime later before the year end. And outside of this new airport opening, we also see continuation of other mega infrastructure projects as well. Some of those have been included here. We wouldn't be able to go into detail, but these are again very significant contributor of the ongoing development of Cambodia, whether in terms of investment value, also in reducing of logistic costs, as well as opening up new area for development, whether it's residential, industrial, or commercial. Sorry, actually one more slide on the inside the overview segment. We have also noticed tourism trend to have changed. This is very interesting because throughout the year 2024, we have seen that land arrival, especially from passenger from Thailand and Vietnam, has taken the lead and actually dominant the overall foreign arrival up to 50% of the total arrival throughout 2024. And since May 2025 onward, where the clash between Cambodian and Thailand borders erupted, we have started to see a significant drop in the land arrival. You can understand that this led by the border closure between Cambodia and Thailand. And it's also somehow affected the tourist arrival through this border as well. However, the air arrival are still maintained, and we believe that most of the international passenger, whether for tourists, for leisure, or for business, still continue to use the air travel smoothly, either between Thailand and Cambodia, Vietnam and Cambodia, or other countries. In this quarter, we also pleasure to present a quick update on our GreenNet survey. So a quick introduction of what is GreenNet survey. GreenNet survey is our in-house ongoing data collection. The last time that we update this data was 9 months ago, and it's a great pleasure to be able to do this data update again. And just throughout, very recently in Q3, we have seen that there are 370 projects currently ongoing at different stages and different locations throughout Phnom Penh. As you can see, most of the activity still concentrate within the 5 central districts of Phnom Penh, including Bang King Kong, Cham Kamon, Seven Makara, Don Ping, and Tukok. We're also seeing that majority of the construction, actually, to be precise, around 65% is at topping out or completion stage, whereas there are only 5% of new site clear, and also foundation only 5%. Just to be short, meaning that most of the construction that are observed within this 370 project are still maintaining active activity, although we have seen maybe several projects experiencing slowing down, especially within the residential market. Okay, so this is the end of the overview section. We will now dive into further investigation into office market and later followed by retail market. So in the Q3 of 2025, we haven't seen any completion. However, we are expecting upcoming completion of 3 mega projects, including FTB Tower, Royal Group Central, and GDT Tower. The current state of these 3 significant towers are at a practical completion, and before the year end, we understand that all 3 will be handed over to fit out by anchor tenants. The key important factors that we are observing in office supply market is that despite the current challenges within the occupancy and leasing market, the total supply of Phnom Penh market is still on track to reach 1.3 million square meter by the end of 2025. And whilst only 23% of the annual supply have been completed, and a remaining 77%, 77%, as we presented earlier, the 3 big tower will be representing this 77% completion before the year end. So this is quite a significant movement, as we can see. The Phnom Penh market is somehow moving away from smaller office building to mega and significant projects. And as we can see in the next slide, the occupancy rate has experienced a slight uptick in Q3, resulting from some expansion and relocation of some of the significant international company and local company. However, with the upcoming 77% of new supply, namely the 3 tower, coming into completion before the year end, we expect that in Q4 we may witness more depressed or corrected occupancy before the tower become filled. In terms of the price or rental rate in office market, we have seen that most of the segment, actually almost all the segment, has maintained relatively stable movement. Only Grade B in CBD that has experienced a further reduction of about 3%. However, overall, the quoting rent is still quite stable. Although we mentioned that the quoting rent is still stable, but we can understand that when it comes into negotiation, landlords tend to be accommodating on the rental discount and additional request benefits such as car park and so on from the tenant as well. However, what we're experiencing right now is quite a interesting two pole of forces. One is the landlord that are competing mainly based on price adjustment, and another group is the landlord that are competing based on quality offer of their space or the quality of the building, basically. This is a difficult dilemma because for most of our landlord, at the end, in the current market, tenant is having a more negotiating power compared to landlord, and hence what we have seen in most of the transactions that we are dealing with, tenants generally request for both price adjustment as well as additional benefit within the newer and better quality building as well. So I think will continue to be a main challenge for the office market for both landlord and tenant relationship. Trend number 2 that we are experiencing is that beyond incentive, tenant retention is also very important. And the tenant retention itself takes more than just a price adjustment. For example, the tenant that remain in the old building or existing building per se and not deciding to move may only value the space as much as the attachment to the landlord relationship, the price point, as well as the quality of service that the current landlord is offering. And the third trend that we are presenting here is the anchor tenant expecting to take up some of the new supply that coming into the market. The three aforementioned tower. However, the occupancy, the pressure on occupancy is still expecting to persist in the medium term. Move on to the retail market segment. Similar, actually very different from office market where we see continuation of new supply coming in. Retail is experiencing slow growth in terms of supply, which is resulted from absence of new project entry, whether resulted from slowing down in construction progress or unable to reach at certain occupancy that allow for them to open. So far in 2025, out of the 860,000 square meter new NLA expected, only 8% have completed in the first 3 quarters of 2025. In fact, we believe that in Q4 we'll see more adjustment of this forecast to be lower. So very likely that 2025 may close the year with very minimal increase, and the projection for 2026 and onward for some of these delayed project will still remain to be discovered. Regarding the key movement in the trends, as I mentioned from the beginning of the presentation, we still see active brand expansion and brand entry as well, still quite dominant by F&B market, which is driven by around 44% of the total new expansion. However, a notable trend we are seeing in this quarter as well is also driven by the boycotting activity of some certain foreign brands. And we have seen the effort of some of these brands into either rebranding or adjusting their brand or changing the brand completely or even exited the market. However, the amount of exit we think still relatively manageable at only 12 brands, whereas new brand entry or some of these would accounted for the rebrand present up to 35 new brands. The occupancy has also showed a significant, a slight increase in a take-up as well. Actually, only 0.6% increase compared to Q2 2025. But this is still an encouraging sign if you couple this with the supply graph earlier, where supply is stabilizing and occupancy continue to recover, although quite gradually. Rental in the retail market across the board, mainly seeing a downward adjustment. Some are slight, some are more significant than other. So in between minus 1.4% to minus 7.8%. And within that, prime retail, prime high street retail is experiencing probably the deepest adjustment at 7.8%. As again, shopping mall remain quite competitive as in the effort to pull in consistent footfall. To mention earlier, number one on the key trends is the brand movement contributed by the border dispute and domestic boycotting. We've seen some brand closure, some rebranding effort, and some delay of opening for those retail outlets that are still in the fitting out or construction stage. Trend number two, we have seen that mall activation strategy that we have started between 12 to 24 months earlier have starting to show the result, but only for those that consistently maintain those activities, especially inside the shopping mall, which leading us to trend number three, where shopping mall show more resilient in footfall arrival, more consistency as compared to smaller let's say, community mall or even a retail podium in some cases. So with that, I'd like to conclude my presentation and would like to hand over to my colleague Kim Sia.
Thank you, Bongkesa. So my name is Kim Sia, and I am the manager of Research and Consulting Department. I will be covering section 3 onwards, from residential to industrial and hospitality as well. Let's move on to third section, it's residential. So I would like to recap of the new launches and new completion for the residential sector. In Q3 2025, we see two new launches from both affordable products. And this is a reflection of what we have mentioned previously in our event, where the affordable end and the mid-range end is now leading the market in terms of new launches, and it is speak truth with the actual launches in the market right now. So these new two products will is estimated to include and added on around 1,200 units into the market. And the location of these products are located in the south. This is also a reflection of residential development following a mega infrastructure that these mega infrastructure normally will draw a lot of traffic into the area that increase the livelihood and businesses around the area. So there are two projects completion. These are an additional 1,400 plus units into the market. This is mean that there's more competitor in terms of leasing products that is pushed into the market. The products that is completed is located in mid-range. Of course, Urban Village Phase 2 is located in the south. And Crown Tower is also another mid-range condominiums that located is more into the west area. We also observed one announced projects. This is just an announcement and it's not yet an official launch in terms of sales. However, Citadel Manor is expected to be the next high-end launch in Phnom Penh in a while. For a high-end condominium to show their face in the market. And this is also signaling some growth in terms of the sales demand in the market as well. For landed property, new launches, we see quite a lot of affordable and mid-range. This is following the trend that we have seen in the market. One of the high-end products that is launched is Naria Square Phase 3. However, in terms of number of units from these products, is really relatively small compared to the affordable and mid-range products that is pushed into the market. So in total, we are expecting 300 plus units. And most of these products will be located to the south, where it's follow what we just mentioned, the mega infrastructure and the new established road connections to the south region of Phnom Penh. Completed products, we've seen 4 projects that's completed in the market, mostly within affordable mid-range products. And this is a good additional 800 plus units handed over to the buyers. For the service department, it is very stable trend where we normally see approximately maybe around 3 to 4 products and projects completed in a year. And in Q3 2025, we also see Basak Signature. This is a new Grade B service department that is opened currently located near Basak Lanes area. Very good location, and it is a really good additional 40 plus units added to the supply. I also want to look into the branded operator. So this branded operator will play a big role in shaping the service department market in Phnom Penh, while locally operated uh, service department can be as competitive or compatible to the international standard. However, with the additional pull traction from a branded operator, it will help in terms of visual visibility of the products and the projects in terms of the we've seen some of the names they see. So the biggest one is the Ritz-Carlton. How years expecting Ritz-Carlton to can our huge brand in Phnom Penh is expected to be a light. I will briefly go through the supply for the residential. For the service department, we're expecting quite a spike of 15%. As I mentioned, there's not much of a supplies expected to complete annually. However, in 2025, we have forecasted 15%. And as of Q3 2025, we have seen 15% of the forecasted has been completed. So, of course, this is something that is not new, and we have seen in the chat before is that the completion and the actual operation of these products will remain low, while the remaining forecasted products will be pushed further into next year. I believe that this is a trend of wait and see from the landlord side as well, in terms of the actual demand in the market. Condominium and landed property follow the same trend. Condominium, we expected right now completion of only 14%, around 9,000 units, and the remaining will maybe potentially push into 2026. So let's brief through the rental rate and also the sales rate for the residential products. Surprisingly, for service department, the average quoting rent in Q3 is nosedived a little bit at only -4% for grade B and -5% for grade A. So what we observe in the market to reflect this downward trend is that there are quite a high competitions from the leasing products injected into the market from mid-range and high-end condominium completion. So from the tenant side, whether they prefer to between service department and condominium, it depends on what kind of nature of their travel is. If it is a minimum 6-month rental, the tenant most likely to prefer to go for a service department, which cost them a little bit more, however, is hassle-free. Yet for tenants that is looking for a lease term at 1 year and 2 years, they would prefer to go to and check out the condo units for lease because the rental per square meter is quite lower. Even though there's more hassle in terms of lack of services, yet this product still is very competitive in terms of rental compared to service department. So these two is currently battering in the market, where as you can see in the condominium average quoting rent is now picking back up with some of the positive adjustment of 1.1% for high end and mid range at 1.9%. Yet on the affordable end, we see some rental adjustment since the demand pool for these products are low spender, especially from local residents, and also a portion of the tenants is students that is migrate from the provinces. For the condominium average quoting rent, the market is very stable. We see some fluctuation on the high end, a little bit below 1% adjustment, upward adjustment. The same trend follow for mid-range, a little bit less than 1% upward adjustment. Only for the affordable end where we see some negative adjustment This is a reflection of the more aggression pricing from some of the new players that is coming to the high-rise residential market. For landed property, average quoting sales price is quite relatively stable. For the single villa, we have seen quite a spike in the average quoting sales price. This is a product that is quite difficult to justify the price reduction where I believe that within the market currently there's still interest from the buyer side for a high-end single villa, while the rest of the unit types, such as link house, shop house, and twin villa, the price is very stable in terms of the price adjustment. I also want to point out this slide. It's quite sensitive from our side, but I believe that this is very useful for Mr. Developers out there. I hope that you're in this event as well. So we already spoken about the quoting rate for both service apartment and condominium, high-end condominium for rent. However, this is the average transacted residential leasing transaction between Q1 2024 to Q3 2025. We have seen a spike in terms of adjustment in Q4 2024, and it subsided a little bit. However, it's hover above $12 per square meter for residential leasing. But what I want to point out is the maximum transacted rental rate, because the maximum range of the transaction from Q2 2024 has been climbing. And this is also reflecting the recovery, the slight recovery in the leasing market as well. The key takeaway for residential, we have seen developer launch project to meet a realistic demand. This is not a relative new trend. However, it is continuing in the market. We have already spoken in a previous event that the affordable and the mid-range end segment is leading the way, following the shift in demand from international investors to more of a local and a mixture of some international investors. So these products will be working and will be sell in the market, and the performance has been stellar. This is why this trend will continue into the future. This is also not the only reason and trend that has been adopted by the developers. Second point is also play a really big role in the improvement of the sales performance as well. Now, for a project to be successful in the market at this time of year, not only the pricing that is very critical, but the payment term, the easy payment term and the installment offers is really critical for the landlord and the developers to consider. And this is what I've seen in the market, that the payment has been adjusted and adapting by the developers to make sure that the sales progress will continue and help with in terms of the cash flow. On the trend of the third trend, I already mentioned that the major developers and new projects that's launched in the market right now is following the mega development, such as the international airport that's recently opened. We have already seen a number of launches before the opening of this airport, and we'll continue to see in the future. Let's move on to hotel market. Now, hotel market is quite an interesting segment. There's not much of a movement. We have seen one of the projects, Hotel 101. This is the biggest and new addition and new launch into the market. We consider this project is at 4 star. However, the re-benchmark will be taken after the project see light of day. This will be located in Junggamon, and this is an additional 700 keys into the market. We also see some opening of hotels. Soma Hotel in the riverside located in Dongping added 60 plus key into the market. But that signature, as we already mentioned, this is a split between service department and hotel. Portion of the building will be allocated for hotel keys at 30 plus key. So these are some of the movement in terms of open and launches in hotel. For the supply, in terms of growth, we see a relatively stable adjustment. For 2025, we projected at for 5 star at 7% increase, and for 4 star at only 2% increase. The overall changes increase in terms of total supply from 2024 to year end 2025 will be 4%. So this is not a concern. Despite we can reflect to the recent press situation of Cambodia, this will be some of the effects that also impact the performance of the hotel occupancy. However, it's too early to project or put this into a specific prediction. This is a wait and see situation. The new international airport will help in terms of number of tourists coming to Phnom Penh. We have already seen a pickup in terms of number of flights that is scheduled for the new airport, and also the number of air flight coming into Cambodia through the new international airport. So this is partly will help in the market. Yet, in terms of the recent news, the recent controversial, it will be a tough situation for tourist market in Phnom Penh and in Cambodia overall. So for the key trend, we believe that Cambodia is working hard from the government side to improve the visualize and the exposure of Cambodia as a tourist attraction to the international view. However, the combat between our strategy in the marketing side for the whole country compared to what is currently being portrayed for Cambodia is quite a headbutt. And this is a tough situation to crack. And I think and I believe that this is a go back, wait and see situation. And I hope that after all the bad press, we can start over and you know, change the way that we operate and advertise ourselves into the to the international market. We also seen a surge in Chinese tourists at 30% for after the opening of the new airport. However, this could be a side effects of the lack of the Thai tourist arrivals to Cambodia, making the Chinese tourist arrival to increase in terms of percentage share by nationality. Yet, if it's a reflection of the new growth of Chinese tourists to Cambodia, this will be beneficial for the 4 star and 5 star hotels in Phnom Penh, of course, and also other side of Cambodia as well. On the fourth key takeaway, the border conflict is really a major impact for the tourists. And for the following news that is being pushed out from the international media on Cambodia as of now, after the border conflict, is also one of the key issues that we have to battle. The government is working hard on this, and I hope that this will be resolved anytime soon, where the market can start and refresh into the future. On to the section for the industrial. This is an interesting section that I also want to cover. For 2025, as you can see on the chart here, we see a spike in the number of new launches for as a special economic zone. So from January until Q3 2025, we have already seen 6 projects These six projects is amount to 1,900 hectare of investment land. This is a large portion of investment land that will create a lot of jobs if the projects will actually see light of day and start its operation. This is the same thing I already mentioned. There's nearly 60 special economic zone that is been green lighted into the market in Cambodia. However, only 20, around 20 plus project is currently under operation. So a little bit over 40% of the total green lighted projects see light of day, and I hope the percentage will increase in the future following the new tariff shift from the previous percentage to only 19. This is an upper hand for Cambodia as well, while it's also increased the attractiveness of the investment landscape here in Cambodia. So I hope will be a good sign and a good attraction for investor to see Cambodia as an investment safety investment environment. As I mentioned, we have 19% tariff imposed by the US. This is a really good percentage. However, due to the recent issue with the border conflicts, this positive news has been overshadowed, and it is not been spoken about quite a lot. But this number is really important for the industrial sector. And the only issues that we have to battle right now is to look into the transparency in the market, whether or not the market is very easy to access, especially from the investor and developer point of view. We also seen a surge of industrial qualified investment projects on a chart on the right side here. So industry has been climbing recently. So for the year to date 2025, it's already surpassed a 2024 number in terms of the industrial growth. So I think this is a reflection of the new tariff law announcement. So I think this is also a part of the behind the scene work from the government side that the government is trying to push in terms of the migration from the low productivity industrial products to a high productivity products such as automotive and electronic. On the left-hand side of the chart, we also seen a good trend in terms of new open of factories in Cambodia. This is a good sign because the closure of the factory in Cambodia is now going down compared to 2023, where the market is quite challenging. However, in 2024 onward to 2025, the closure of the factory is very minimal. This is a good sign. I believe that the number will continue to skyrocket due to the recent boycott on the Thailand products. I believe that this will be a encouragement for the local businesses to establish their own facility and factory in Cambodia. However, it's too early to project yet. This is what we expect and hope that will be seen in the market. And then we also reflect to the government side is looking into industrialize the whole economy. However, if we look at the skill gap between the ambitions of the industrialize of the whole country with the educational alignment, is still mismatched. So what we have seen in the market in terms of the student percentage share by sector from 2023 to 2024 is that a majority of the measures that has been taken by the students are within business and law. And for the science, currently is at only 21.7%. Now, if we want to industrialize and prepare ourselves for industrialized economy, we should be focusing more on the science major where this is also reflecting to the lack of skill-based labor here in Cambodia. This is also one of the criteria that the investor in the industrial market is questioning the market whether or not we have enough resource to support. While this is also encouraging more of to expand the local capability and also to be less reliant on the international workers. So go back for the trend is very what I've just mentioned is that the volume of the investment are inflow to industrial sector. This is following the direction of the whole economy, and the government is really working hard behind the scene to improve the attractiveness, the transparencies, and also to appeal more open to the investment, especially the recent announcement from five of the automotive assembly plant in Cambodia. This is really good news, and this is a hard work that we have seen that is produced into the result. So, of course, the same tariff relief has spurred factory investment, export, and confidence into Cambodia. And the last one is in the growth of local factory developers is expecting this will increase the local demand because since we started and established a CBA Cambodia in Cambodia, for our residential leasing, we have only worked with international tenants to find the factories and space for our client. However, we hope that in the future, after what happened in the border, we will see more inquiries from locals, businesses, and manufacturers. Thank you so much. This is from my part, and I want to go through our services. We are a team from Research Consulting. We offer a market study, feasibility study. So basically, if you have any inquiries that's looking for a market study to understand better in terms of the market condition, to make a sounding development decision, we are here to help you. Please reach out to me and my team, maybe Kaisa as well. She will be more happy to give you a free consultation of the market as well. So let's move on to the question and answer Q&A. We are here, so we will be taking questions and answers.
Okay, thank you, Kinsia. Thank you, the audience, for your attention so far. So we'll move on to the Q&A session. We're starting to see a few questions coming in now. So to remind you again, you can use the Q&A box inside the Zoom menu to send in question. So we've got two questions. Maybe we can start with the first question. Of course, the first question is quite broad, and I think it's open up for an opportunity for us to discuss about what is the projection for real estate market in 2026. I'll start with my personal projection for now, and then I will hand over to Kim Sia. So when we look at into many factors, including internally and externally, a lot of signs are suggesting a relatively stable market. We're probably not seeing continue any harsh adjustment across the board just yet, but maybe some gradual adjustment still continue in terms of rental rates and sale prices. If you look at the overall global outlook, most of the country are projecting slightly more positive forecast in 2026 compared to 2025. So for Cambodia, I think it's the same case. We probably continue to see the new activities slowing down, hence allowing for some time to for the tenants and buyers to absorb the remaining inventory and space. I think this is probably throughout for both commercial and residential Although I think residential will see continuation in new launches, maybe more active than commercial market. Any observation, Kim Sia? Please feel free to add.
Yeah,
I believe what you cover is very aligned with what I believe in the
market.
market.
I
I
believe
believe
that
that
the
the
residential
residential
market will
market will
continue to
continue to
see
see
a
a
progression in
progression
terms
in
of new
terms of new
launches,
launches,
possibly
possibly
maybe
maybe
1, 2
two
each
each
quarter.
quarters.
Within,
Within,
of course,
of course,
we'll be
we'll be
following the
following
same
the
trend
same
as I
trend as I
mentioned,
mentioned
is within
within
mid-range and
for
affordable end. We're also expecting some of the new addition for the high-end products as
products
well
as well
in the
in the
next
next
couple of years. However,
However,
this
this
portion
portion
of
of
new
new
launches we're
launches we're
expecting
expecting
to
to
be
be
only
only
one or
one or
two,
two
because
because
the market right now is not favoring in terms of high-end products. For the
for the
commercial
commercial
end,
end,
I
I
believe that
believe
the
that the
market will
market will
be
be
very stable. The correction in terms of rental rate will not be as aggressive. I believe that it will be very stable in terms of the adjustment. New launches, I believe
I
that it
believe
will
will
be following the same trend, very
very
low
low new
launches.
launches,
Maybe
maybe
could be
none
none at all.
at all.
This
This
reflecting the
reflecting the
currently
currently
oversupply in the
oversupply in the
commercial
commercial
side.
side.
Okay,
Yeah,
thanks,
thanks,
Kim.
Sia.
Actually, we
Actually, we
received
received
more
one more
question
question
now
now.
about 6-7 question, but as I read through, most of this question are quite concentrated on the outlook of 26 similarly, but there's a slight different question is what is the economic outlook and what does it mean for our real estate market? So as we covered earlier in terms of the supply and price trend as we expected. We think the overall economic outlook is still persisting in more an enduring way, as in we still see a lot of external shocks. There's some slowdown in global geopolitical tension, like it's in physical war in some part of the world, like Middle East. As we can see, also good news from the Israel and Gaza region as well. However, if you look across the economic, consuming power is still retracted. You look at the consuming power in consumption power in China, both China and US are still affected. And as Cambodia, as a trading partner, will of course also be affected. The same with other Southeast Asia countries as well. And what that could mean for the real estate market is that I like to share this note that what we tend to observe is real estate is not a leading in economic activity. It may be contributing, but it's not leading. It's actually the result of the economic activity, meaning that when you see economic growth or a positive growth, it reflects the same in the demand for real estate, whether it's a space for commercial expansion or residential expansion or industry and so on. If the economic activity is contracted, real estate will be resulted the same. So real estate is a byproduct of economic activity and usually lag in between 2 years to 3 years. So let's say, for example, if we see a significant economic rebound in 2026, we may see a significant rebound of in real estate later, possibly in 2028, just for example. So I hope that covered some general forecast that we can provide at the moment.
I do have a question that I want to answer. It's very interesting.
go
It's a
ahead.
very small one. So the question is that from your presentation as regard to residential market, is it right to say that mid-range would be a better potential as it serves both local market and overseas investor? And I totally agree with this. I mean, in terms of affordability products, it is really good addition to the market. As we can tell that before COVID, our pricing in terms of high-rise product is very skyrocketed, and it's very mismatched in terms of the actual spending and affordability from the local buyers. So is this really good for the new recent trend where more affordable from, especially from Bipok Tmoy condominium? There's 3 projects now. This is a really good addition. However, it is not a investment product. I do believe, yes, mid-range is a really good balance between pricing and also the investor friendly as well. The location for this mid-range will be located at a really good location. While going back to what works in the market is that despite being mid-range, the location is still playing a good critical role in the sellability of the product. We've seen in the market, mid-range, the pricing is really attractive. The location is really good, normally located in nearby BKK1 area and Golden area, which is also tourist and also has quite a good amenities in that area as well. So yes, this is just a quick answer for this questions for me.
Thank you. Actually, we also received some interesting question of other territory outside of Phnom Penh, because pretty much what we covered this morning is covered Phnom Penh. So we got one question about the outlook, since like outlook and forecast is a favorite topic for today morning. We have two questions. One is regarding the outlook for Sihanoukville, and then the other is outlook for Siem Reap. So why don't I cover, very briefly on Siem Reap, and then Kim Sia maybe can cover on Sihanoukville. So I think actually we just did a market update in Siem Reap not long ago, maybe 3 months ago, actually in July. So you can find the presentation on our website about Siem Reap growth and opportunity. But in a nutshell, we believe that Siem Reap still have a lot of untapped opportunity. I think the existing infrastructure is amazing. We have a lot of, the infrastructure, the road connection is very good. The utility is already established. The number of hotel and commercial establishment is already existing and continue to expand. Although we've experienced some slowdown in tourist market, as we can see, that Siem Reap historically has been quite concentrated on tourism market. We think there is an opportunity to use the existing resources that we have and tap into the untapped market. For example, the long-term stay for expatriate community, whether in like digital nomads or retirement living, senior living. We also see opportunity for healthcare sector to grow, as well as in Siem Reap is also serving as not only for the population in Siem Reap, but also for the neighboring provinces. It's almost like a regional hub for most of the commercial, administrative services, banking, for example, and also healthcare services that I've seen already started and expecting to continue to grow. So these are just a few of the untapped area, and I believe also there is a good opportunity in conversion of some of the underutilized hotels and hospitality project previously into longer term use, as what we mentioned earlier, as well as a tourism town. Siem Reap also present an opportunity for tourism education. So this is mainly hospitality, service education, catering, customer service, and so on. These are, I think, Siem Reap couldn't present itself better for this such opportunity. We're still looking for the right operator and the right person that have the visions and understand the landscape of the existing landscape of Siem Reap, in order to tap into this opportunity. So on to you, Kim Sia, on Sihanoukville.
Thank you, Bongkisan. So for the investment opportunity in Sihanoukville, I would split into
two parts. So one part is the growing interest from manufacturer and developers in the industrial market in Sihanoukville, and it will continue into the future because the location, the positioning of Sihanoukville is very strategic, located to the coastal area. The deep sea port is there. The expansion for the deep sea port to 14.5 meter in depth is expected to be completed and to open in second half of 2026. So this is a good addition to increase in terms of drive and attractiveness in the investment for industrial. And from our side as well, we have seen quite a surge in terms of interest from the developers side and manufacturer side, looking into the coastal area and establishment and new project, special economic zone as well. So this is a up to your face kind of investment potential. So looking to other side of the investment opportunity in Sihanoukville, we have seen a good new addition for mid-range products for high-rise from Times Square. This is a new product that's launched in Sihanoukville and also make quite a sound in the market. The location is really nice. I think this is made possible by the current situation in terms of the performance in the coastal area. Such an attractive location, such a really good location for development. It's just that the products that's been building in the area is mismatched to the current demand in the market. And now we are seeing quite a new addition to the area that is more focused on both local and
international investors. So this is a good addition that we see and hope to be continue to see in the future. On the hospitality side, I believe that in Sihanoukville is already have quite enough of hospitality and hotel products already. Yet I believe that the expansion should be looking to the island. I think the island will be the main
focus on the attraction in terms of tourists, and the new announced international airport on Korong Island will be the accessibility to the growth of development on the island. Because currently, despite the natural resource that we have, we are still lacking in terms of competitiveness in the hotel market, making the price skyrocketed on the island. So I think this is also a future outlook for investment potential in Sihanoukville.
Okay, thank you, Kim Sia. We have some time left to address some more questions. We'll try to finish by 10 a.m. so everyone maybe can go back to work. Anyway, we still have a lot of interesting questions. Actually, one question particularly on the industrial market. So maybe again for Kim Sia to answer, but I will just mention very briefly on my thought, and then I will hand over to Kim Sia. The question is whether the 19% tariff will bring in industrial developer confidence or for investment. So particularly, as mentioned earlier, the 19% tariff rate for US is comparable or actually competitive with what the Southeast Asian neighboring country are having. For example, 20% in Thailand, 20% in Vietnam, also about 19 to 20% in Bangladesh as well. So these are, if you look at across the board, it's a regional competitor in terms of attraction of industrial investment. So US, when we look at the competition-wise, we are on a similar path in terms of a tariff rate. And if you look at the demand side, the manufacturer that would like to produce and import into US still significantly large amount will need to diversify their production base anyway. So they may be looking to diversifying from majorly produced in China, for example, to still maintain some production in China, relocate some production into Cambodia, for example, to Vietnam, for example, and then to Bangladesh. So the diversified strategy will likely to continue in that way. The question now is how do Cambodia present itself to be competitive compared to those regional peers? For example, what are we bettering or improving on, let's say, logistic costs, ease of doing business, the transparency, and the infrastructure and reliability of utility and so on. So these are other factors that we still have to consider and still need to compete on in order to maintain the competitiveness of Cambodia production.
Okay, I totally 100% agree with what you just mentioned.
I believe that 90% is really good rate, but it's still very comparable to the regional competitors such as Vietnam and Thailand. So the only thing that we can do from our side as a Cambodian government is to look into, of course, what Bongisa mentioned, is the ease of doing business in Cambodia, the transparency between the government and the investment that is coming in, and also to strengthen our workforce. Now, our workforce, we have quite a large sum of our workforce that is in the market. However, when we talk about workforce, we also want to talk about qualified workforce. So qualified, this is a concern from the tenants and the manufacturer. This is the first question that we ask us, whether or not there are qualified workforce in Cambodia or in the region where they are planning to establish their factory. So this is a concern, and I believe that this is something that we can improve on to make sure that we are more competitive in the international view to Cambodia. I think that's is very aligned to what Bongisa just mentioned. Yeah.
Okay, I'd like to take on another question on geopolitical tension. Again, this relating to the forecast of outlook, and particularly whether the geopolitical tension, I assume the border clash between Cambodia and Thailand will affect the economic performance, and if so, which an industry or sector likely to be affected. So we couldn't say for sure how we expect this to play out or to be resolved at what time. What we can only observe is that if the tension continue to extend for extensive period of time, whether it's lukewarm or hot, pretty much both countries will make a loss in terms of economic gain, because of course it will affect investor confidence. So investor here, as in both domestic and international investor, as in the stability and safety of the country. And I think it's also affect the consumer confidence as well. As we presented earlier in the financial market data, we've seen that consumer now are leaning toward a saving trend rather than spending trend. So it's just another way to say that they're planning for rainy day, and they're not probably very confident in the future market, and so they're just being cautious. So consumption is another area that will be affected, and as a result, we can expect that retail performance will be affected by this development as well. However, there could be other opportunity to offset this effect. Depending on how soon this conflict could resolve, we may see return of investor confidence again. Southeast Asia, for especially both Cambodia, Thailand, still presenting a very attractive opportunity for most of East Asian investors, such as Japanese, Korean, even Chinese investor in terms of industrial and hospitality investment. So if this conflict, which we hope to subside soon, can resolve, we believe that there could be this return. And again, yes, just to conclude my answer for that. Thank you. Okay, I think we have time left for one last question, and I think this question will be very special. We actually see several questions already, and I think we're just trying to hold this to the last because it's very special. So we got several questions here about the crackdown of scam activity in Cambodia, especially in the last few days. We have seen that this has made a big headline among both local and international medias. And I believe that this crackdown is necessary for the further development of Cambodia. And while it may cause some disruption and chaos in the meantime, I believe that scam crackdown is an international effort. It requires international effort because this criminal activity will not only happen in any certain country. It's usually a cross-border operation with multiple countries involved and multiple location of operation and multiple country of target as well. So everyone is at loss, whether the local country that this activity happen or the targeted country. So I believe, strongly believe that Cambodia government is very keen to cooperate with international community and as well as related partner to further the investigation and crackdown of this activity. And like Kim said, we have to address this with strong heart and hand, so that we can clean up this activity and bring back peace and stability to our region. And I have to stress again, it has to be international coordination and effort in order to make this measure effective. So yes, so with that, I think this concludes my answer. Kim Si, do you have any other question that you want to address? I think we cover pretty much because most of the questions are related to forecast that we somehow presented.
Not for me.
So, okay, so with that, we'd like to conclude this morning presentation for Q3 Market Insight. Thank you everyone once again for tuning in. Please stay tuned. We will circulate the presentation deck to your email that are registered to this presentation. Also publish this deck onto our website as well. And the recording of today's presentation will also made available on CBRE Cambodia YouTube channel as well. So please follow us on those channels. We're also available on Telegram, Facebook, Instagram as well. So you want to keep in touch and see what updates we present every day. Please stay in touch through those channels. So thank you. We look forward to see you soon again. Goodbye.